I'm sure you've heard, or perhaps anxiously watched it happen live. The Bitcoin price recently broke 60K USD before falling back down to 55K. Some said it was the end of the bull run. Some say 100K is in the near future. Now that it seems to be on the way back up, let's take a deeper look into what happened and what's going on in the space. This is Josh from Phemex team. Before we start, please click on the like button, subscribe to our channel, turn on alerts, and share this video with your friends. Of course, if you reacted to every price drop, you'd have no time to do anything but watch the market. So, in the case of asset spikes and dips, size matters. When the price of an asset rises or falls by less than 1%, you probably don't hear much about it. So what percent is significant? 2%? 5? 10? 20? This of course depends on the asset. In most traditional cases, a 5 or 10 percentage price change within a few days would be monumental. However, since crypto is still quite volatile, a price change like this in Bitcoin is news, but rather common news. Traders often analyze the market to determine price points that they think will likely determine the next move. These are usually called resistance and support levels. So let's take this opportunity to look at one type of price indicator market analysts often use. In the crypto space, tracking whales has become a common technique to mark price predictions. Whale refers to those holding very large amounts of a specific cryptocurrency. If you hold a huge amount of Bitcoin, you are a Bitcoin whale. It's become common to track these whales by using data showing when they have deposited or withdrawn large amounts of stablecoins onto a trading platform. Since stablecoins make it easier to get in and out of something like Bitcoin compared to the hassle of withdrawing and depositing fiat from your bank account, people often think that if a whale is holding a lot of stablecoins, that indicates intention to enter the market. However, this measurement has a fair share of skeptics since the whales know that everyone can see such a move, so they can use it to manipulate expectations. A more widely accepted measurement is tracking the price at which many whales have bought Bitcoin and using these prices as important indicators of the short-term trend. The idea here is that once the price is near one of these price points, a dip below the price point will indicate a further dip to the next lower one, and an increase above the price point will indicate a continued increase to the next higher one. The reasoning behind this is the overall tendency for whales to either sell on a price dip while they can still break even, or to buy when the price dips below the price they initially bought at. This means that the action occurring at prices where several whales bought in initially can have major influence. If the whales all sell to break even, then the price will experience a significant enough downward shift to influence smaller investors and futures traders, and it becomes likely the price will fall until hitting the next price where many whales bought in. Of course, this is only one among countless technical analysis considerations, and needless to say, it's not always right. Nevertheless, it gives one example of a better defined price point to look at when considering what kind of price change is significant. As it so happens, the Bitcoin price seemed to settle around 55K after the dip from the new all-time high. And 55K is one of the price points said to have several whales. But again, this is only one kind of analysis and isn't always accurate. If you find it interesting and want to learn more about technical analysis, I encourage you to look into it. I'd recommend starting at the Phemex Academy. Of course, there are other ways to look at the price than just technical analysis. It seems a big reason this dip hasn't caused much panic is because there still seems to be strong indications of institutional support and mainstream adoption to continue growing. For example, the explosive growth of NFTs has attracted many artists and art buyers to the crypto space. NFTs aren't based on Bitcoin, but for now, any growth of mainstream interest in crypto is also a step toward the mainstream for Bitcoin. As for the more concrete mainstream support, let's take a look at some of the most significant institutional moves into cryptocurrency of the last several weeks. Surprise, surprise, MicroStrategy recently bought another $15 million worth of Bitcoin, meaning that they now hold more than 91,000 Bitcoins. That's a lot of Bitcoin, but their support has been established for a while now. A couple weeks ago, JP Morgan compiled a crypto basket product that will let clients make indirect investments with the cryptocurrency market as part of their portfolio. A crypto technology firm called NYDIG raised a couple $100 million from several mainstream sources, including Soros Fund Management and Morgan Stanley. Furthermore, NYDIG co-founder Stone Ridge recently stated that starting more or less next week, you're going to see an absolute drumbeat of pretty game-changing milestones from some of these firms. So let's wait and see what he was implying. MasterCard has already been in the crypto space for a while. Last year, they even released a crypto card where users can hold, exchange, and convert cryptocurrency. Now they have announced plans to support some cryptocurrencies directly on their network. The reason stated for this decision is pretty straightforward. It should be your choice. It's your money. In reading their announcement, it sounds like they're planning on starting with support for well-established stablecoins. As they stated, not all of today's cryptocurrencies will be supported in our network. We expect consumers and the ecosystem as a whole will start to rally around the crypto assets that offer reliability and security. It's those very same stablecoins that we expect to bring into our network. Alright, so continuing in the credit card field, MasterCard isn't the only one entering. During the Q1 earnings call, Visa CEO Al Kelly briefly mentioned their intent to add crypto to their network. Kelly's crypto talk on this call wasn't as clear as the recent MasterCard announcement, but it sounds like they're making similar plans to include stablecoins on their network. Kelly stated, "To the extent a specific digital currency becomes a recognized means of exchange, there's no reason why we cannot add it to our network." Alright, moving on to the tech field. Google's recent move toward adapting crypto isn't on the same level as MasterCard or say MicroStrategy, but it still shows an acceptance of its legitimacy. Google Finance added a crypto tab at the top of the main page along US, Europe, Asia, and currencies tabs. As crypto is decentralized, it makes sense that it wouldn't be included in any of these other tabs, but nonetheless, adding it as its own overarching category shows an acknowledgement of its move into the mainstream. This kind of acknowledgement doesn't only make crypto users happy, but it's likely to help validate its legitimacy in the eyes of people who use Google Finance to keep track of traditional markets but haven't dipped their toes into the crypto space. PayPal, on the other hand, has already been supporting crypto on their platform for several months. You can choose from Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. So far, you can only buy, sell, and hold. But PayPal CEO Dan Schulman has stated that users will be able to pay with cryptocurrency by March this year. Unsurprisingly, this won't actually work by paying merchants with cryptocurrency. Rather, the crypto will be instantly converted to fiat, which will go to the merchant. More recent news has come out that PayPal seems to be acquiring Curve, a company specializing in crypto storage. This move is in line with PayPal's seeming commitment to the crypto space, and it appears likely we'll continue hearing about further crypto use on PayPal. Alright, there are many more examples of crypto's continued growth into the mainstream, but I can't include them all here. So to recap, Bitcoin hit a new all-time high of over 61K several days ago, before falling back down and hovering around 55K. But there wasn't too much panic caused by this dip, due to the combination of technical analysis not pointing toward a huge dip, and the apparent continued growth into the mainstream. If you don't have a Phemex account yet, just click on the link in the description, or scan the QR code on the screen. Create a Phemex account, and you will get a 7-day free premium membership trial and other trading bonuses. To learn more about Phemex and cryptocurrencies, watch out the videos in the box on the left. And if you're new to the crypto world, have a look at the videos on the right for some of Phemex's user tutorials. Thanks for watching this video. Bye.